You probably heard this before, but my next guest suggesting that investors should always kind of find a way to remain patient and calm. It's come in handy here recently. I want to bring in now Federated Hermes, the Deputy CIO of Equities, Steve Chiavarone. And Steve, I like, the approach your firm, all the guys, you guys are known for that, right? But it feels like maybe there's a greater sense of urgency, certainly than there was a week ago.
Yeah, it feels like it's time to move. That, bad news has gotten less bad and the market's ready to move on. And I think it's the right play. I think we're at the beginning of the end of this conflict and you got to start putting money to work for what comes next.
Well, we know markets are forward-looking mechanisms, right? So they look forward 6 months, they look forward 12 years. And that's why it's so amazing to me how many experts keep coming on and talking about the near-term impact of inflation and oil and these kind of things. And I think the market's going to look through it. I think eventually the Fed looks through it. So let's talk about then how to take advantage of it. You talk about key market fundamentals, and you've given us 5 things. Do you have a particular ranking for them? Because for me, it feels like ultimately earnings would be number one.
I think that's absolutely right. And, credit to Steve Auth, we've kind of co-developed this list. But earnings are the North Star, and earnings estimates keep moving higher. But the other ones are important, right? Credit spreads, market volatility. They're all lower today than when the conflict started. And then you've got oil futures, which as of December are still inside of 80. And the macro data, people forget, we just had a great jobs report. And inflation's surprising a little bit to the underside.
That PPI number was a huge shocker today.
Yeah, and what's most important about both the PPI and the CPI is there's no evidence yet, we'll see how long things go, of oil prices bleeding into core inflation.
When it comes to volatility, do you use the VIX?
We use VIX and MOVE here. I think bond market and equity market volatility have been.
Because when it went to like 31, historically, that's one of the ultimate buy signals.
And it could have gotten a little higher, which would have been a kind of screaming buy signal. But the fact that it's down below has told you that the market's kind of gotten used to this.
Let's talk about some ideas here. Comfort systems, you've mentioned it, Steve has mentioned it. Yeah. I got to give you guys props. Because these charts, folks, you just kind of glance at them at home, you don't necessarily always zero in. That's 300, and now it's 1,667. And you still think it may have some upside here, huh?
Well, look, I think the market's going to return its attention to what was really driving it in January and February. And AI infrastructure build out is certainly still intact. We think it could even accelerate. And this is the ultimate picks and shovels company. It's HVAC, electrical, plumbing systems that you're going to use in the data center build out. It certainly has run. We get that, but we've known this company from IPO to while they were a small cap and a mid cap, and now they're entering the large cap territory. This is a beneficiary of one of the biggest infrastructure plays in the history of the United States, and we don't think that story's over.
Semis over software. There's been last 48 hours some nibbling at software, which is fine. But you on the semi side, you think Micron is sort of your proxy right now? Yeah,
so Micron kind of underperformed up until this year. When the memory shortage came into focus, it exploded in the first part of the year. When the conflict broke out, it was clear to market participants that software wasn't really impacted by the conflict, and so it became a safe haven. Now that the conflict is waning, the market is turning its attention back again to the disruption that could happen to software, and they're coming back to the semi names. And this is a name that was down 30% during the pullback here. We're only back, not even quite back to the highs. And, we've got a backlog here that is, they've already sold out all of their capacity for 2026. We think this is a stock that breaks out to new highs.
And the high bandwidth memory, just the pricing on that just keeps going right through the roof.
There's a shortage. Yeah.
I'm going to ask you about your firms.
Yep.
And it's a income fund.
Yep.
How does this work? It's Payer. I love the symbol. PAYR. Payer. How does Payer work?
So the way Payer works is it takes low beta, blue chip dividend stocks, that are yielding 4.5%. And then there's an option strategy. It's the most conservative option strategy that we could develop that adds another, let's call it 4 to 4.5% income. And so what you get, especially if you're in your retirement phase, is a monthly check of relatively tax-advantaged income, because it's either qualified dividends or some return of capital or a little bit of capital gains. But you're getting upside equity market participation, defensive, and something around an 8.5% yield on average over time. And in a market that's flat this year, Payer's up 10%.
And I think too, we've been all this chatter about private credit and these kind of things. For me, if I'm a novice investor or, listen, I've made a lot of money, but not necessarily in the stock market, I would want something like this right now, particularly over something that's opaque and I'm not quite sure how it works.
That's why we built this. I mean, we built this because when you're in retirement and you're taking income, you don't want to be in high octane. You don't need to be in a super growth portfolio. You want to be in blue chip stocks, beta 0.6, right? You want the most conservative option strategy to deliver that income, not something that's overly exotic. And so this is really designed, I think it speaks to the culture of our firm, but it speaks to the clients that would need it. It's conservative.
Right. Good stuff. Hey, you guys are killing it. Conservative, 300 to 1660, whatever it is.
That works too.
Have a good one.
Thank you, sir.